Okay, so in this video I will be doing a bar replay running down the trades from this week on the Ger40. This is with the 15-minute strategy. So yeah, let's get to it. So let's find Monday here. So pretty obviously it is bullish overall. So the base of the strategy is using the 4-hour time frame for the bias. So clearly very much bullish. If we were to mark up our structure, we had that sweep of the low down here where we got some nice trades, swing trades and 50-minute trades. Took out this high, so put it a clear swing low down here. Then we had a really strong push to the upside. The only bit of structure that is really built in terms of swing structure would be this sweep here and a break of structure there. That's all we've got to work with. So yeah, that would be my swing low because it ran liquidity. And then now we've printed a clear swing high. So this would be my 4-hour swing zone. 4-hour swing range. So coming into this week, I'll be looking to take longs from certain areas. So it has to be a 4-hour demand zone, or a sweep of demand, or a low, or come into the discount. So we can see we have demand here. So we can look for longs from here, or if we sweep it, the whole area. Mark it out like that, or come into the discount, so it can be anywhere within the discount. Now we do have demand here as well, so maybe it plays on these zones here. Now just bearing in mind, if I were to mark up this candle like so, so we saw a push up, a push down, a push up. Now when you get these types of zones here where they don't take liquidity before running, they usually get ran as liquidity. So if it doesn't take liquidity, it gets ran as liquidity most of the time. Now sometimes it will hold from these zones, but yeah, a lot of time it will try and sweep it, then go. So same sort of thing here as well. So we're in this area now regardless. So I'll drop down to the 15-minute time frame. So coming into the Monday morning, I was looking for a potential order flow shift on the 15-minute time frame to then look for long. So you can see the 15-minute is very much bearish on this pullback. So it's pulling back into this 4-hour POI. I want to look for longs now. So let's get to session now. So 6:30 for me, UK time. It has clearly pushed to the downside. So we've taken out this 4-hour zone, or maybe it's going to sweep it, as I said. So that's the low there. So yeah, looking for a potential order flow shift regardless now, because we've taken the 4-hour POI here, or liquidity, or we're going to tap into the discount. So either of the situations is going to happen here. So just waiting for the 15-minute to align bullish now, basically. So supply is still holding. And now here's the first failure. So this internal high or supply, either or is the same thing, as fail. So supply fails here. We can also see that supply held price for what, about an hour here, then an impulse. So yeah, clear area of supply, clear high in the market. Go to the 4-hour. We've come into our discount. We've also ran this 4-hour internal low as well. So a really nice sweeping motion here has happened. So we failed to close below this low twice. So now we're looking really good for longs. So we're seeing a potential order flow shift on the 15-minute time frame, and now I want to see a 50-minute sweep of a low. So nothing there, so nothing for Monday for us. Moving on to Tuesday. Let's backtrack to the 4-hour. So like I said, really nice sweep there. We now have a really clear target here. This is a weak high. This high has currently failed to take out this low down here. It's also the previous week's high. I believe that's the previous week low. Yeah, that's also the previous week low there. So something to add is about 90% of the time you're going to get either your previous week high or your previous week's low taken out. This is the same for like Forex as well, pretty much with anything. So 9 times out of 10, one side of your previous week's range will be taken. Now what is the most obvious that's going to be taken here, because we're bullish, so pro trend would be look for longs. So knowing that, most likely the high is going to get taken out here. So that's something you can add to your trading already if you wanted to. But yeah, 9 times out of 10, either the high or the low will get taken from your previous week. The other 10% is when both sides will get taken. I think, yeah, or yeah, either both get taken or none get taken. I believe it. I think it's 9 times out of 10 or it's 8 times out of 10. It's very high anyway. Regardless, 80 to 90% at the time, pretty much for everything, whatever the asset you're trading. So yeah, I got a really clear target. It's a week high, previous week high, also the all-time high as well. My 4 hours very much bullish. I had a really nice sweep. 50 minutes bullish. Every time frame is bullish. So I want to see a sweep of a low to then hit a long. Let's wait for this to load up. So get my sessions. There we go. So we have a clear low down here, which is Asia low, and then we get multiple lows in this demand chain here. So I'd mark up the last one. So maybe it sweeps some movement in here as well, but I'll mark up these for now to keep it clean. So waiting for a sweep. We get one there. So we've ran Asia low. Candle that took liquidity. Was that one there? Stop order at the high. And we have our target up here for 3.11R. So stop order, so I need it to trade beyond that 50-minute candle high. And we're in, playing it on. So a nice push away for London. Now, we've now built liquidity potentially to come take in New York. So this low here, this low here. Now in terms of continuations, I'm happy to take continuations when I'm already in the trade, but I do prefer it to be like a decent distance away from the original entry. So in terms of this one here, if we were to come down and take this low, I wouldn't take that one because basically I'd have an entry here, an entry here. I don't really want to. I don't really see the point. Now if we took this one here. Oh, we took this one here. I'm a decent way away from this original entry basically, so it would be fine for me from there. So playing it on, we've taken liquidity, and we've got a nice bullish retracement candle there. So a nice candle to enter from, took nice liquidity, added an extra confluence here. We had a clear area of supply here, where we saw that really strong push to the downside, which ran our liquidity here. We then push back up, price held from there for what, 3 50-minute candles, and then strong impulse. So this leaves us what, a demand zone, which is also a flip. So this demand flip this supply here, so a really nice strong zones. These are the best supply and demand zones when they flip the alternative version. So demand zone with liquidity resting above it, around that liquidity, tapping into there. It's an extra confluence here. It doesn't have to happen, but when it does happen, these usually play out. So yeah, nice entry here. Tagged in, comes back, and then eventually over Asia, or just well at the end of Asia really, we get TP. So this combined is 6.77%. So yeah, really nice 2 trades there. Now onto this Wednesday morning. What is the bias? The bias is still long. So even though we've just about to fully take out this previous week's high and the all-time high, I'm still happy to take longs as continuations beyond this point. Because if you see a good chunk of the time when we take out a high or swing low as well, usually it's highs because it's mainly bullish overall. We will then continue a fair distance. So you can see took out these here, continue a fair distance. Took out these here, continue a fair distance. It happens, took out this high here, continue a fair distance. It happens a lot of the time. Yeah, when you see a 4-hour breakup structure, it likes to continue. A lot of time when it doesn't is when it goes bearish. You can see like we take a low and then it will pull back, take a low, pull back. But when it's bullish, it will then just continue. It's the nature. So yeah, very much happy to take continuations beyond this point now. So where is my areas of liquidity? We have a low down here. We then have Asia low here as well. So either of these would be nice. Okay, so we don't quite take either of these lows, but what we have done, we built a new area of liquidity here. So if we were to draw up structure, we'd have a push up, down, up, down, up, down, something like this, push down, push up, where we would hope it would take this, but it doesn't. It comes down and takes that. So move this across. So unfortunately it doesn't take this here now, but it's taking this low here. So it would be nicer to take that one, as I said, but it hasn't, so I'm still happy to play it, just knowing it's a little bit not as clean basically. But if you look at the candle, it's a perfect candle entry. We had, it's basically a 50-minute bullish engulfing after a sweep, so which is like pretty high probability. So a sweep there, entry from here, and then at the buffer, and then a 1 to 3 target there. We're tagged in, really strong push away, not quite hit TP. Okay, and then coming to New York, so I'm still happy to look for continuations because we've only just taken out the 4-hour target, so we're not too far beyond it at this point. So yeah, looking to get in scalings is still okay, but it is riskier for sure. But if I'm a decent way away, kind of like what we saw here, I will get involved because it's not too far beyond this original target here. So what I'm hoping for basically is that the price will at least continue to like this sort of area here, and then maybe get a pullback. So yeah, still happy to look for a continuation or another scaling at this point. So we have this weak internal low, so it's not the best area of liquidity, but when there's high momentum and a clear bias, these sorts of trades will play out. You can also then use a bit of supply and demand again, well, an area of demand here, where it's all like a strong impulse from. So it's tapped into demand, taken liquidity beforehand, so similar to this here, but not as clean. Nonetheless, an entry here. So the first candle that took the liquidity was that one there. It's then continued lower, and then this candle here would now be my new entry. It tags in, and sorry, it'd be a 1 to 3 target as well. There. So you get TP on both of them. So really nice couple of days there. Playing on to the, was it Thursday now? Yeah, Thursday. Let's take a look at the 4-hour. So now we're a decent way beyond our original target to take out that high there. So now the longs do become more risky because at some point it's going to want to pull back, especially overall. It looks like it really is in need of a substantial pullback in terms of the daily or the weekly. This is probably like the biggest run without a pullback you've seen, probably other than that one there. And you see here we have a pullback here. It's a little bit rangy on the daily time frame, but on the 4-hour there was opportunities here, and then it goes again. So maybe we see something like this occur now. So something like this. Oh, it's really poor, but yeah, eventually then continue. But if the 50-minute is bullish, I would then still follow it. So yeah, the 50-minute is still bullish, so I'm still happy to look for longs. I just know they're a bit lower probability now. So we have a low there, and then we have this crazy wick down here as well. So either of them to be swept. There was no sweep, just went without us. Anything for New York. Got a sweep here. So an entry here. It is lower probability, but it can play, so I'm happy to take them. Sweep there for an entry. Tagged in. Oh, got tagged in and out pretty quickly. And what it also done was left a re-entry here. So let's put this order on. So what happened was we had our liquidity here that we swept there. We swept it, pushed higher, built a new low, swept that low, and then tag in there. So a re-entry there after the loss. 1 to 3 up here. Runs quite nicely away. And again we get some crazy price action like we saw here on the previous Wednesday. the previous day, late in New York. Oh, sorry, let me backtrack. So I wouldn't be, in terms of like trade management, I haven't really mentioned that this this video. Now I tend to like to just leave stops open, so leave the stop loss where it is, apart from certain situations. So this would be one. So I knew originally that taking this trade is a little bit lower probability because we don't have anything to target. We're now basically in no man's land. This is all-time highs. Anything can really happen. We come back into that zone, which is fine. I'll still have my order left open, but what we're seeing here, we tap into it, we push away, we tap into it again, we push away, we tap into this again, so this demand zone that was left. We're now pushed away once again. So if it was to come back into this zone, this area, it's now, well, it would have then tapped into it 4 times. Now if it taps into it the 4th time, well, the 3rd time really, and it doesn't go, it's not going to go at that point. So now I would then have my entry here at break even, because like I said, if it comes back into this zone again, my entry, it's not going to play. Very unlikely it's going to play at that point. So playing it on, still very much bullish, still happy to hit longs, so let's play it on. Then had the big sweep of the previous day high, and then we get a sweep here. So as I said, every time frame is bullish, so I'm still happy to look for continuations. Now if it wasn't in this original long here, I would take this, but as it really should be in this still, this one doesn't really make much sense because, like I said, we're in no man's land in terms of the 4 hour. Taking them here was okay because we hadn't quite fully broken beyond this high yet, like a strong breakout structure yet. Now we've done that, we're starting to get a little bit more choppy price action, you can see. So here starting to get choppy, choppy, choppy. Should be, like I said, should be in that trade still as well. Taking this one here doesn't make sense. Now if he wasn't in this trade, I think taking this one is fine, but like I said, yeah, if you're in this one here, I wouldn't be getting involved in this one. And if you did take it, it wicks you in and out and then runs fairly decent after that. However, what we saw here was a big sweep of the previous day high, and we're still not continued beyond that point. So play it on. Still hasn't failed. Oh, sorry, still failed to take out that high fully. Still failed. And now it's come back into hit break even. So this trade is a break even. This one would have been a loss if we got involved. So play it on. That's the end of the week anyway, and you can see how it plays out. So it comes back in that supply, and then it's absolutely tanked late on in New York. So last 3 days were a bit weird price action late on in New York for the Ger40. But yeah, that is the end of the week for the Ger40. So to summarize, Monday we had no trade. It basically just set us up for the week. We printed the week's low on the Monday. So yeah, Monday no trades. The Tuesday we had two trades for 6.77% combined. Wednesday we had 2 trades for 6% combined. We then had on Thursday a loss into what becomes a break even the next day, and then Friday a potential loss. Like I said, you wouldn't get involved with it if we win this one already. Like I said, it's much higher risk at this point to try and get a scale in compared to here as well. But worst case, if you did take it, you'd be 6.77 there, plus 6%, so 12.7%, 12.77% at this point here. Took a loss, 11.77%, break even, and then potential loss there, 10.77%. Worst case at that point, but yeah, really it's 11.77 for the week. So yeah, that's that done. Hopefully you guys enjoyed it and got some value from that. And I'll see you guys in the next video.